All right, in this video, we're discussing the three types of analysis in the Forex market. The first one would be the technical analysis. So basically, what's happening with technical analysis is we're using historical price movements, right? We're using all of this information that we have on our left, right, and the current information where price is to determine what possibly could happen in the future, right, to determine our potential movements, right? That's why you should always have a buy and a sell view, all right, so that you can take advantage in one of those that happen. Because remember, in the markets, you can report right or wrong. Everyone is an opinion. When you do your analysis, it's not that that's what's going to happen exactly. Sometimes it just doesn't happen, and sometimes it does happen. So the most important thing about technical analysis is everything that happens on the market is priced in. It's on this chart right here. We are shown it by candlesticks. We see it through the candlesticks. So every price movements that are happening in the market, we see it through these candlesticks. That's why candlesticks are very important. I cannot express how much candlesticks are very important. If you master candlesticks, you have the markets. The game is in your hands, right? The next thing that we have on the three types of analysis is fundamentals, all right? So fundamentals, that's news. We always hear people talking about news, right? Fundamentals is basically looking at economical data reports, news headlines, we can even say politics, economic or social politics, all of this, everything that affects the economy of the country is fundamental news. There's not much to it. You just have to understand how to analyze data reports, unemployment reports, even monetary policies. You have to understand all of these things if you're going to trade the markets using fundamentals. All right. Some people, these things come easy to them. Some people prefer technicals. People prefer different things, and we all should come up with our own opinions and understand that we may be right or wrong. Because even if we are looking at the information that we have on the charts, the move that we just had this week, the big drop that we just had this week, right here, right, this big drop right here was caused by news. Even if you keep looking to our left, all of these big drops might be caused by news. And that's what's important. We have to read the historical parts, right? These ones, these big moves, were probably induced by news, right? This one, this is the one that we just had, right? Even the moves that are going up were probably induced by news. Because remember, they have to take price to where they think is a place where they'll get a good price for their own trades, right? They're not on our sides. We're trading against them. We just have to trade like them to get our own share. So that's economical news. And then the last one that we have is sentimental analysis. Sentimental analysis is used to gauge how other traders are feeling, right? So how you are behaving, how you are associating yourself with the markets, and how others are also behaving or reacting to the markets is what we call sentimental analysis. All right. Because remember, every time you place a buy and a sell, or you place 5 buys in 1 minute and then you cancel them, all of that information, the markets are collecting all of that data. So you as a trader, you have your own emotions, other traders have their own emotions, and all of that information is what these candlesticks are showing us. So even if you are using technical analysis and fundamental analysis and sentimental analysis, you can even reach to the same point, to the same conclusion, because everything, technical analysis, past data is going to show you areas where everyone reacted to, right? Price was going up and then it reached the level where everyone reacted to. And We can make around this area as an example, right? This is an area where if we're using technicals, price made a high, right? And then when price came back up, it came back and reached that high and couldn't go up. Let's see, we're using technical analysis. When this high is coming, we know that there's potential that it might also reject around that area, right? So we're using historical price movements. And then if we look at fundamentals, we could say maybe these big drops around that area are being induced by news, these big drops, right? They won't just give us a big drop like that for nothing. We could say that they're being induced by news. When news comes out, that's when the big drop comes. And then if we're using sentimental analysis, I'm pretty sure people having to have seen that price has rejected here a couple of times, right? When price comes back around this area, people will also react by shorting the pair because price has been falling every time it goes around that area. So people are most likely to do the same thing. So in order to be a successful trader, you have to understand all three types of analysis. You have to use all of them to your advantage. Only looking at one, yes, you might be successful only looking at one, but it might be best to have a little bit of knowledge of all three so that when you're not confused or you're not lost when things start working in different ways than you were expecting them to be. So those are the three types of analysis.